Welcome back to Everything Money. In this video, we will bring you our thoughts on the current environment that is the housing market, where it's headed, where it's going, signs if there might be a crash, and what you might be doing to prepare or be prepared in this situation. I bring questions about the housing market to Paul and Mo, a couple guys who own and operate over $100 million in multiple businesses, real estate all over the world, and stocks, and they'll provide us with the mindset moving forward. So here they are. Come on in, boys. Paul and Mo.
So first off, follow us on Instagram, Everything Money Investing, and follow our 3 personal accounts because we all 3 were rejected for our blue check mark in our first attempt at it, which I don't get because we've all had people trying to copy our accounts. So housing is I've been thinking a lot about housing lately because there's still a lot of people who talk about a housing crash happening. And everybody's got to remember that housing had a crash for the first, for a nationwide crash for the first time ever in 2007, 2008. But the levels of fraud that were going on in housing back then, I don't see today. Do I see a hyped market? Yes. Does that mean it can't keep going up? No. In fact, inflation is real estate's best friend. Go look at, for example, guys, everybody here knows Youngstown, Ohio. Tim, actually, our CEO, is from Youngstown. When Tim was born in 1980, that was the peak of Youngstown's population, and since then it's fallen in half. But yet housing prices are still up in Youngstown the last 40 years. Because everybody thinks, oh, population drives housing prices. Well, it can, but you've got to remember that's just the demand side of it. The supply side matters too. If a city that's losing population or stagnant is also destroying dilapidated houses and there aren't many builders building in there, housing prices will still go up at a reasonable level. But what you got to remember is inflation is what drives housing prices. Because when you want to build a home, it costs labor and it costs the material costs, right? With inflation, labor goes up in price and materials costs go up. Look at lumber prices in the last 2 years.
Oh my god!
Yeah.
By the way, do you guys see lumber is back up again, like $1,200 for every 1,000 feet or something?
Wow.
Yeah, it's back up. Let's go look at this right now. Let's go. You can see my screen, right, Seth?
Yep, go ahead.
Yeah.
I got lumber prices here.
No, they went. I know they spiked and was on their way down. You're saying they're back up. Oh, there they are again. I see the news articles right there.
They were getting lumber was
So
getting
here's
abused
lumber
there for
right
a while.
Yeah, look at this. This was freaking November. It's doubled since mid-November. We're talking about 5 weeks ago, the price of lumber has doubled. So guys, one of the great things about our software is we're going to include at some point here in the future, we're going to include a bunch of data, economic data that has, like right now, our software is basically stocks and soon to be real estate. But pretty soon we're going to have data, lumber prices, housing prices by city, by state, population growth numbers. That way you'll be able to do all your research on one location that's pulled from the federal government so you can have all this information at your fingertips. Because guys, being able to get this data is what started me on this whole entire journey of creating software. I sat here and I love looking at the data. I love looking at cities. I'm going to pull up our competitor, Y Charts. Now the great news about Y Charts is they're $200 a month, so have fun pulling it up. But Youngstown, Ohio, median price for homes. I mean, look at this, guys.
Hold on.
Oh,
I still see your Everything Money.
Whoops. Okay, so let's go here. Let's go to Youngstown, Ohio, median house prices. Youngstown's population is dropping, but look at this. Since 2012, the average household price has almost doubled. The average price per house has almost doubled. So I look at this saying, what's happened in the last year few years has caused this? Inflation. Inflation is going to be the driver of real estate prices. If you tell me inflation is going to be 10% a year for the next 20 years and you own a home, your home is going to be worth many, many times more 20 years from now. That is just a fact. Why? Because if somebody can go buy your home, think about it this way. If you paid $200,000 for a house today and it's worth $200,000 and 10 years from now, that same house costs $400,000 to build, are you telling me that your house is going to be worth $200,000 still? No. It might be worth $350 because somebody will say, well, I can pay $400 and build a brand new house, or I can buy this house for $350. Why? Because my replacement cost is $400. So I want a little bit of a deal, but it's still going to be way more than the $200,000 I paid for it. That's the reason why housing prices go up. Also, your income. If I told you right now your mortgage is $1,000 a month and you make you make 75,000 a year. All right, great. If all of a sudden 10 years from now, because of inflation, you're making 200,000 a year, are you still willing to pay $1,000 a month for your mortgage payment? No, are you going to be willing to pay $2,500 a month for your mortgage payment? That's what drives housing prices. So let's not talk about this market crash that's coming in real estate. I'm not convinced it's coming. Do I think things are very hot? I do. But guys, remember, I don't see the fraud that I saw 12 years ago, 13 years ago. I see the fraud in crypto. I see the fraud in stocks. I don't see the fraud in housing. Do I see a very, very hot market? Absolutely. I wouldn't say fraud in apartment buildings, but I see the very loose underwriting standards in apartment buildings. That's what causes me to go, okay, with apartments, there might be a dip. I don't know. But for single family homes, I'm not saying there won't be a dip. And I'm sure there'll be areas of the market where there are dips. But overall, I think it's based on inflation. It's really been a big driver of housing prices lately. And I'm okay with that. I'm Paul, a big fan. I'm glad we have inflation. What was that, Seth?
As someone who's sitting on $50 million cash waiting for all this to fall back down to a reality, what are you planning on doing when this comes back down?
I don't look at it when it comes back down. I look at it when it could go up from here and still be a better buy than today. Because as long as fundamentals justify the values I'm looking at, I'm okay. Now, if you told me right now, Paul, inflation is going to be 7% a year for the next 10 years, I would buy every apartment building I could find right now. Because pretty much every single one of them will do very, very well, assuming 7% inflation for the next 10 years. But I don't know that. I don't know where inflation is going to be for the next 10 years. So I still have to make it based on the fundamentals historically. And I still make my basis on 3 or 4% inflation every year. So that's what everybody has to remember. Remember, we always talk about in stocks, everything's based on assumptions. And for real estate values, for apartment buildings, if I knew income was going to go up in my apartment building 7% a year for the next 10 years because inflation is 7%, I would buy everything I could because it might be bad today, but it'll be very, very good in 3 or 4 years and even better in 10 years. So it's all about me. I don't look at everything as things can be better, but prices be higher because the fundamentals might have caught up. With real estate, it's harder for prices to fall than it is for something like stocks. With stocks, I believe stocks will fall greatly because of also how bubbly stocks are right now. Stocks are an absolute bubble. You know, we had that interview with Monish and he said, well, no, it's only the top 20 stocks. Well, every bubble isn't a market-wide bubble. Even in 2000, and I should have said this to him, but even in 2000, stock prices were really concentrated. The bubble were concentrated on the very, very large tech businesses. Sounds a lot like today. But difference is now, we don't see, back then, mid-cap and small-cap companies were a good buy. I'm not seeing that today. With real estate, 12, 13, 14 years ago, there was fraud. People were no doc, it was called ninja loans, no income, no job applicants or something like that, right? You could literally apply for a job and just say, I make $100,000 a year, even though you make 20, and they believed you. That's the difference about today. So I look at it going, okay, do I think the market's very hot? Yes. Am I glad I'm not a buyer of a house in this market? Yeah. But does that mean that I don't think, I bought a nice house a year ago and I actually feel like I got a good deal because I'm in Akron, Ohio, and I bought an expensive home in Akron, Ohio. What's the market for expensive homes in Akron, Ohio? Not very good. So I look at it going, okay, so I bought something that I liked and I'm happy with it. And 10 years from now, if it's worth 50% more, great. And if it's not, I'm fine with that because I'm very fortunate from my perspective that I don't look at my house as a way of making money, but the average person will. But even then, guys, if you put a reasonable mortgage on your home and you pay it down, even if the property doesn't go up in value $1 over 20 or 30 years, you can still make 7 or 8% return on your money. So just look at your home as a forced savings plan. Buy the home you want. If you're going to stay there for a long time, it's okay if you're paying a little bit more than you wanted to. That's fine. But if you're only going to be in it for a few years, don't even buy or just rent, if you ask me.
Yeah, that was going to be my next question, Paul. I deal in the wedding business, and I see a lot of young couples who are getting married, moving in, buying their first home for the first time. And I see a lot of people overpaying or what seems like I'm sorry, how would I say this, Paul? They are seeing a house for the first time on a Saturday, getting their offer in by 4 p.m., and they're fighting a lot of people who are throwing over-ask, 15, 20% over-ask cost offers in. So if I'm in that situation, should I be worried, Paul?
Again, if your goal is to be in the house for a long time, you'll probably be fine. And we don't know what the future holds. If the biggest caveat to me is the inflation number. If inflation, Mo just bought my house, right, from me. And I'm very happy I gave him a good deal. If inflation is big for the next 10 years, Mo could very well easily make 80% on his money. Right, Mo?
Yeah.
If we have 7% inflation for the next 10 years, I mean, and my house here, if we have 7% inflation for the next 10 years, even though this house probably won't sell for the premium that it might go up 4 or 5% a year, but my Lord, if this house goes up 4 or 5% a year for the next 10 years, I'm going to make 60, 70% of my money. Great.
Right.
I just look at it as a home is a very personal thing. It's a very emotional decision. If you're going to be someplace for a long time, it's okay to overpay a little bit to get the house you want. Right? It's okay. But I'm about ready to put a lot of money in my house, a lot more money in my house, because Lisa and I are back together. And we were talking about building, but I basically bribed her and said, what's it going to take for us to live in this house? And I said, I'm willing to do whatever it takes to remodel it the way you want. Right? So I'm going to go into it for more than I want. But guess what? If we have 7% inflation for the next 10 years, it's going to be a no-brainer. I'm going to make a lot of money off that investment.
Mm-hmm.
If you're interested in news and notes and analysis in the morning, you can join Mo at 9 a.m. Eastern every weekday. He brings you news, stock trading advice, stock trading news. But Mo, I bring this up because you are the expert on the news, where the markets are headed. What are your thoughts on the housing market?
Housing. So I'm not a big real estate person. Any real estate that I do it with Crossroads Group, and it's going to stay that way because frankly, I have no interest in going and doing real estate. But from everything I'm seeing, we're going to get eventually a cool down is going to happen. I agree with Paul. It's not going to be some drastic crash, but eventually everything is going to cool down. Maybe it's going to be when the market starts to pull back a little bit, but we see refinances. As interest rates go up, refinances are going to come down. As interest rates go up, maybe home purchases are going to start coming down. But also, if interest rates start to climb and home purchase prices stay where they are, that's when you're going to start to see that big slowdown coming in real estate. But again, I can't predict real estate markets. Nobody really can. But the good thing is there's not the fraud out there that we were seeing back in 2007, 2008, like Paul just said. So, I don't know. This is a weird time. That's all I have to say. Weird times.
Paul, one of our tiers in our Everything Money community, or one of our Patreon tiers, is you get access to you for guidance on a real estate deal. And someone asked me recently, it says $10,000. And they said, is that a joke? And I didn't even answer. I just said, I almost bought a $280,000 8-unit property in Akron this year. And you know darn well there was no way in the world I could have even approached it without your guidance. So, talk about the Everything Money community and what you can provide with them in terms of real estate guidance if people want to get into this housing market, whether they're buying, whether they're flipping, or getting into multi-unit properties. Talk about it a bit.
The number 10,000 sounds like a lot. And I don't want to dwell on the number because I actually want to go higher. Remember, guys, I have time. Time is the only commodity I have that is very limited, right? I can go make more money if I want to tomorrow, but time is my big thing. But I look at the first real estate deal I ever did, and it was a small deal, 2 units. If I'd had my guidance, I ended up breaking even on that property over a 12-year investment. If I had spent $10,000 with somebody and bought a better property, I would have ended up ahead and made more than $10,000 more. It's a big number, but remember, having the proper guidance, understanding a real estate deal is super, super important. I remember I recently our good friend John Dyer, he took me to lunch once and he invited somebody, a woman who was buying a property in Shaker Heights where I was an expert in. And by the way, I shouldn't even say, forget about expert in Shaker Heights. I was a good real estate person. She gave me her financials, and literally 3 seconds into it, I go, what do you assume your property taxes to be? And she goes, well, this. I'm like, yeah, that's going to skyrocket. And sure enough, she left. She called some people and she was like, oh my God. And she bailed in the deal. Guys, this is a $3 million acquisition for her. She would have lost $500,000 on it.
Just like that.
So I jokingly sent her a $150,000 watch and said, here's your thank you present to me. You can buy me this watch. Of course, she didn't buy it for me. But the point is, like, if you're going to buy even a $500,000 property, even a $200,000, even a $100,000 property, getting guidance from me for 4 or 5 hours will give you the guidance on every property you buy in the future. Every single property you buy in the future. Understanding value and understanding how to analyze is not just a one-time thing. It's a thing that's going to pay for itself over long periods of time. And our community is great because we have so many people talking about every investment idea. And, you know, people tag me in things and I try to answer here and there. And, you know, by the way, have you guys noticed it's gotten a lot more active lately with the tags? Like, I'm getting tagged like 20 times a day and I can't even keep up. So
tags are insane.
Yeah.
So, you know, these are the things I hate talking about the money of it because listen, I get it. It's a lot of money. I don't care. It's a lot of money. Like, I just look at it going, hey, if you want to, I wish I had me 20 years ago because I would have saved myself multiple seven figures. I wish I was doing 20 years ago what I'm doing today for real estate because I would literally have tens of millions of dollars more. So if
Paul,
I had
a cousin down south. He paid $250,000 from a YouTube / Facebook real estate expert. And since then, he has moved to quit his job, done a number of flips, and currently owns 8 vacation properties, like single home vacation properties that he's amassed in the past 6 or 7 years.
He paid somebody $250,000?
Yes, he did. For their
Tip on my price of $250,000, please. Thank you.
All right, Paul, final take on the market.
Don't expect a crash. Don't look for a crash in real estate. Just if you're looking to invest in real estate, be cautious. If you're looking to buy a home for yourself, it's okay to be aggressive as long as you're going to be there for a long period of time. If you're not, be cautious and just wait. It's okay if prices go up, but if fundamentals make more sense in the future, even though prices are higher, that is a possibility.
Hey guys, Seth here, jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I. You get the 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
If this makes sense to you, go to everythingmoney.com or patreon.com/everythingmoney. Join our community. You can talk to people all over the world who are in the same boat as you. They're looking for guidance. You'll get it from Paul, Mo, and a little bit from myself. Some funny laughs. So that's our take. Fondle thumbs up. Watch more of our videos. You'll love them. See you next video.